Hello, it's Simon Zutshi here, and in this video we're going to talk about the latest interest rate hikes and answer the question, is this going to cause a UK house price crash? The reality is many people are worried if we have interest rates rising again, we're going to get to an interest rate breaking point where homeowners who are coming off fixed mortgages are just not going to be able to afford their mortgages, and many landlords are seeing the interest they're paying each month higher than the rental income coming in, particularly on single let properties. So is this going to cause a housing crisis and a housing price crash like we had back in 2008 and 2009? That's what many people want to know, and that's what we're going to answer in this video as much as I can. Now, in my last interest rate crisis update video, which was back in June, at that time the Bank of England Monetary Policy Committee had voted 7-2 votes to raise the base rate 0.5% from 4.5% up to 5%. That was actually the 13th consecutive increase since December 2021, when rates were only 0.1%. Now, the reason they did this was because inflation was coming down, but it stuck. It is stuck at 8.7%. And so the problem is that the Bank of England typically uses interest rates as a macroeconomic tool to try and bring down inflation. When interest rates go up, it makes borrowing far more expensive for businesses who tend to contract, they lay people off, and the whole economy slows down. People have less money to spend. That's why inflation comes down. Now, if we fast forward a few months, putting the rates up in June up by 0.5% has obviously worked. It's caused inflation to come down, which has come down from 8.7% now to just below 8%. But 8% inflation is still 4 times the target that the Bank of England has of 2%. So the question is, are we going to see rates go up further? Now, we've just had the announcement that interest rates have gone up by this time 0.25%. So last time it was 0.5%, so they're slowing down the increase, but it's still an increase, this time from 5% up to 5.25%. Now, they're doing this because their policy is obviously working. The question is, are we going to see further interest rate rises? And what's the impact going to be on the UK property market? According to the Nationwide Building Society, property prices are falling the fastest since 2009. And that's when we had the last property market crash. Now, the reality is many landlords are retiring. And it's not just because of interest rates, it's for all sorts of reasons. And a caveat we need to explain here is that this is only a problem for people who are on variable mortgages. About 25% of properties in the UK are unencumbered. That means they don't have any mortgages at all, so it's not a problem for them what happens to interest rates. A lot of people have fixed rate mortgages, and again, that's not a problem right now until they come to the end of their fixed rate term. Now, something like 1.8 million mortgages are coming to the end of a fixed rate in 2023. For many of those people, depending on when they fix their mortgage, they might have incredibly low rates they're currently on, and the new rates they're having to go on, the standard variable rates, might be 3 or 4 times what they were paying previously. So think about that. Imagine someone's paying for a mortgage and they're very used to paying this low amount, and suddenly your mortgage payments on your own home quadruple or triple. How would you cope with that? Many people, I believe, are not going to be able to afford it. They'll use savings, they maybe get into debt to borrow money to pay their mortgage, so they know if they don't pay the mortgage, they're going to lose their house. But I'm concerned that many people will get into big debt situations and ultimately they're not going to be able to pay their mortgages. So I predict we're going to see a rise of repossessions. Now, the government has made it very clear to mortgage companies that it doesn't want them to repossess people. Can you imagine the government would get into so much trouble? That's not a good vote-winning policy if lots of people are getting repossessed. So they're telling the lenders to be more patient and work with people, but still, there are going to be people who just won't be able to pay their mortgages. And right now, we have many landlords, particularly with single let properties, where for the last decade they've had really low interest rates. They've been on variable rates because of that. They haven't wanted to change from those low interest rates they were paying. And suddenly, over the last year, these interest rates have shot up and we've got these interest rate rises again. What that means is that for some landlords, what they're paying on their mortgage every single month is actually more than they're bringing in rental income. So this means they're not making any cash flow. In fact, they're having to subsidize their property. And even worse, if they own that property in their own name, and if they're a high rate taxpayer, because of Section 24, which was introduced back in April 2017 and phased in over 4 years, it was a change to the way that we as investors are taxed. You see, prior to that, it always was best to have property in your own name. That was most tax efficient. But now, that's not the case. If you have a mortgage, which many investors do, and if you're a high rate taxpayer, which not all, but a lot of investors are, it means you're going to be paying more tax on your property income if the property is in your own name. And the vast majority of people still have property in their own name. They have single let properties, which mean a lot of those are just not making money anymore. So many of those landlords are thinking about selling their properties as well. So what you need to understand is, with all this stock coming onto the market, you've got landlords selling up, homeowners can't afford, there's a massive increase in supply of stock on the property market. Now also you need to look at the demand side. Whilst there are people who want to buy properties, people are putting in offers, they're securing deals, it's very difficult to get mortgages because of the high interest rates and particularly the high stress multipliers that the mortgage companies apply just in case rates go up further. It means that many people are being refused on their mortgages. So you have people who want to buy property, but they're unable to buy property because they can't get finance. And again, this feels very, very similar to 2008, 2009, where it was very difficult to get finance. So at that time, most investors sat back and did absolutely nothing. There really wasn't much demand for property, which is why prices came down. And they got to a price where actually they were a really good deal again, finance got easier, and more people started to buy property. The thing is, you don't want to wait till prices hit the bottom. Because at that point, when everybody knows prices have hit the bottom, I mean when the media think it, the general public think it, the owners of the property who are trying to sell them think it as well, they will believe that someone might come along and offer more money for their property because the market starts to go up again once it's hit the bottom. The challenge is that those people won't want to be as flexible on price as they are right now when prices are coming down. So now really is the best time to be buying property as long as you know what you're doing. But how do we go and finance deals if we can't get mortgages? Well, just like 2008, 2009, there are certain strategies and tools we can use where we don't really need to get mortgages. The two fundamental things I want to mention are purchase lease options, where we take on a property, we take on the responsibility, we look after it, we rent it out, we pay a certain fee to the owner every single month, and we rent it out for more money so we can make profit and cash flow on a property that we don't even own, which is pretty good. And we agree to buy the price sometime in the future when hopefully prices have come down and started to recover again. So we can control a property, we have the right to buy it, we get cash flow from it without a big deposit and without having to get a mortgage. Now unfortunately, purchase lease options are probably one of the biggest misunderstood strategies and tools in the property investing world. Most people just don't understand it, they think they know about it, but my view is if you haven't actually done a purchase lease option, you probably don't know enough. So over the next month, I'm going to be releasing a lot more free training on this YouTube channel all about purchase lease options to make sure you are equipped with the right tools to use in the current market conditions. So do make sure you subscribe to this channel, hit the bell icon, because whenever new videos come out, I want to make sure that you're the first person to be aware of those. And hopefully if you like this video, please hit the like button, put a question, and I'll try and come and answer as many as I can. So let me tell you a little bit about these purchase lease options and what I'm going to cover over the next month in my free video training that I'm going to release on this YouTube channel. So we're going to show, if you are a first-time buyer and you want to get your foot on the ladder, how you can use a purchase lease option to move into a home as what we call a tenant buyer, and you will be able to do that without getting a mortgage and without putting a big deposit. So it's a really good way to get your foot on the ladder. Also, if you want to sell property, you're a landlord looking to retire, you're struggling to sell it, as long as you don't need the money from the sale now, you can sell your property at a higher rate than you'll be able to sell in the current market conditions. And also you get a tenant to move in who looks after the property for you. No need for any management or maintenance fees. They look after. So you'll make more cash flow from the property, and you'll continue to make cash flow on a property where you've got a sale lined up for the future as well. Or maybe you are just an investor and you want to increase your cash flow. You can find landlords who want to get rid of their properties. You take them on a purchase lease option, and then obviously you rent it for more you give the landlord, so you make a profit on a property you don't even own. So those are some of the ways you can use purchase lease options. You can also use purchase options to control property before you buy it, particularly if you're using commercial to residential conversion or those kind of development strategies, or commercial property, which is where options come from originally. Now, one of the problems with options is that there's no certainty for the seller. You don't have to buy if you don't want to buy. So another strategy we use is called vendor finance. This is where you do actually buy the property. It comes into your name, but actually the owner helps you fund that purchase. Now, again, a word of warning here. Most mortgage companies, most mortgage brokers don't understand vendor finance. It has to be done in the correct way to make sure it's done legally and properly. But especially if someone doesn't have a mortgage, you can take on their property, it comes into your name on land registry, but you can do it without having to get a mortgage. And the owner does really well because they get a really good price for their property, and they still make money even though they've sold the property. Again, it's a bit more complex. I'm going to do some more videos on this YouTube channel all about that, so make sure you subscribe so you don't miss any of those. The challenge is most people who've got videos on YouTube at the moment, they haven't been investing very long themselves. Maybe they've been doing it 5-10 years, and they weren't investing during the last property market crash. And at that time, there were many people trying to teach property investing who started in the mid to early 2000s when the market was booming, and anyone can invest in property when the market's going up. It's much harder. It needs a different skill set and different strategies when the market's coming down. So a lot of companies who were trading at that time went bust because they just didn't know what to do. And I'm a bit concerned that some of the people who've popped up in the last few years, they don't have the personal experience of what to do in a falling market, which is a shame because actually it's a really good time to buy as long as you know what you're doing. So stay tuned to this YouTube channel, and I'll be sharing with you over the next couple of months exactly what you need to do in the current market conditions. I do hope this video has been useful for you. You know, rising interest rates is a challenge for many people. It's a big problem, but with every dark cloud, there is also a silver lining. And it depends very much how you look at this situation. Because this is causing massive uncertainty in the property market, it also means there's massive opportunity for those of us who are ready. So this is going to be a great time to invest. You really want to upskill your knowledge, make sure you're taking action, putting in lots of offers, working with creative finance, and this is a great time to build your cash generating property portfolio. I do hope this has been useful for you. As ever, I encourage you to invest with knowledge, invest with skill. Watch the next video. I do hope you got massive value from watching this YouTube video. I'd encourage you to click on the link below to come and do the online training with me. And I've got another video lined up for you, which I think is also going to be really useful that you should watch once you've registered for the online training with me. So invest with knowledge, invest with skill. I'll see you very soon.